Treasury clarifies clean energy supply chains. A guide to Notice 2026-15. On February 12, 2026, the U.S. Department of the Treasury and the IRS released Notice 2026-15, marking the first major regulatory step in implementing the Prohibited Foreign Entity (PFE) provisions. These rules, born from last July's One Big Beautiful Bill (OBBB) Act, significantly expand upon previous foreign entity restrictions, creating a new compliance landscape for clean energy developers and manufacturers. This interim guidance provides much-needed clarity for the transferable tax credit market, offering safe harbors for supply chain tracing and supplier certifications. The shift from FEOC to PFE. The OBBB replaced the previous Foreign Entity of Concern (FEOC) framework with the more robust PFE regime. This change impacts eligibility for several key tax credits, including Section 45Y, Clean Electricity Production Credit, Section 48E, Clean Electricity Investment Credit, Section 45X, Advanced Manufacturing Production Credit. The PFE rules restrict not just who can claim these credits, but also who can purchase them in the growing transferability market. Navigating supply chain depth. One of the most significant hurdles for developers is determining how far up the chain they must go to verify compliance. Notice 2026-15 simplifies this through the Material Assistance Cost Ratio (MACR) calculation. The Identification Safe Harbor. Rather than tracing every raw material to its source, the IRS has established an exclusive and exhaustive list of components. Inclusions. Taxpayers only need to account for manufactured products, MPs, and components, MPCs, listed in the 2023 to 2025 Domestic Content Safe Harbor tables. Exclusions. Items not on these tables are disregarded. Notably, structural steel and iron are excluded from MACR calculations. Exceptions. This pathway is currently unavailable for nuclear, fuel cell, or geothermal projects, as they lack specific safe harbor tables. Interconnection property. The notice clarifies that qualified interconnection property requires its own separate MACR calculation. If the interconnection property fails PFE compliance, the developer can still claim the Section 48E credit for the facility itself, but the interconnection costs must be excluded from the qualified investment. Compliance for manufacturers, Section 45X. For the Section 45X credit, the IRS has simplified the diligence process for manufacturers of specific components, such as solar modules and battery modules. Cost percentage safe harbor. Manufacturers only need to evaluate the specific MPCs listed in the corresponding safe harbor table. Any constituent material not listed is ignored, removing the burden of proving the upstream sourcing of every minor subcomponent. Contract manufacturing. The notice clarifies that direct material costs are typically those incurred by the party performing the production, though costs from the credit-claiming taxpayer can also be included. Supplier certifications and penalties. To facilitate compliance, the IRS introduced an optional certification safe harbor with 3 distinct pathways. Pathway Focus Application. General attestations that the property was not PFE manufactured, and the supplier has no reason to know of PFE involvement upstream. Section 45X attests to the total direct material costs for inputs not produced by a PFE. Section 45Y, Section 48E attests to the total direct costs of manufactured products not produced by a PFE. Note on penalties. Suppliers face significant stakes. Inaccurate certifications can result in penalties of 10% of the tax underpayment or $5,000, whichever is greater. Record-keeping and effective control. The notice also previews effective control rules. This includes licensing agreements for intellectual property entered into or modified after July 4, 2025. If a counterparty has the unrestricted right to determine key operational levers, like production timing, they are considered to have effective control. Record-keeping requirements. Retention. All certifications must be kept by both the supplier and taxpayer for at least 6 years. Filing. Taxpayers must attach a statement to their credit forms, for example, Form 3468 or 7207, identifying the specific safe harbor used. What's next? 1. Solving the supply chain depth challenge. The most pressing question for the industry has been how far upstream a company must trace its components. Notice 2026-15 introduces the Material Assistance Cost Ratio, MACR, to simplify this process. The identification safe harbor. Taxpayers may treat components listed in the 2023 to 2025 Domestic Content Safe Harbor tables as an exclusive and exhaustive list. What this means: if a subcomponent or raw material is not on those tables, it is ignored for PFE compliance purposes. Exclusions. Structural steel and iron are specifically excluded from MACR calculations. 2. Sector-specific impact. Section 45Y, Section 48E, and Section 45X. The notice provides targeted relief for different segments of the clean energy economy. Clean electricity, Section 45Y, Section 48E. For solar, wind, and storage projects, the safe harbor allows developers to disregard any components not explicitly listed in the IRS tables. Interconnection note. Qualified interconnection property requires a separate MACR calculation. If the interconnection fails PFE compliance, you can still claim credits for the facility itself, but you must exclude the interconnection costs from your basis. Advanced manufacturing, Section 45X. Manufacturers of battery and solar components gain clarity on contract manufacturing. Cost percentage safe harbor. Manufacturers only need to evaluate the specific manufactured product components, MPCs, that appear in the safe harbor tables. This limits the diligence required for complex upstream supply chains. Contracting. Direct material costs are generally attributed to the party performing the production activities. 3. Supplier certifications and penalties. The notice establishes a framework for supplier certifications to move compliance risk away from the end taxpayer. There are 3 pathways. 1. Attesting the property was not PFE made and the supplier has no reason to know of PFE involvement. 2. For Section 45X, detailed cost breakdown of non-PFE inputs. 3. For Section 45Y and Section 48E, total direct costs attributed to non-PFE products. Standard of reliance. A taxpayer can rely on these certifications unless they have a reason to know the information is inaccurate. Penalties. Suppliers providing false certifications face penalties of 10% of the tax underpayment or $5,000, whichever is greater. 4. Key definitions and effective control. Treasury has signaled that more comprehensive definitions are coming, but the notice previews the concept of effective control. This includes the unrestricted contractual right to determine key operational levers, for example, production quantity or timing. Important date. Licensing agreements for intellectual property entered into or modified on or after July 4, 2025, qualify as effective control. 5. Next steps for market participants. Record keeping. Certifications must be retained by both the supplier and taxpayer for at least 6 years. Reliance. Taxpayers can rely on this notice until 60 days after formal proposed regulations are published. Critical deadlines and specific tax forms. As a follow-up to the PFE guidance in Notice 2026-15, the following summary outlines the critical deadlines and specific tax forms required for compliance. 1. Critical compliance deadlines. Ongoing, pre-filing. Taxpayers must complete a pre-filing registration process with the IRS to obtain a registration number for each facility before making a transfer or elective payment election. Annual tax filing. PFE compliance documentation must be attached to your annual income tax return for the year the credit is claimed. 6-year rule. All supplier certifications and supporting MACR calculations must be retained for at least 6 years from the date of the claim. 2. Required IRS forms and attachments. Depending on the type of credit you are claiming, you will need to file specific forms. Each requires a separate filing per facility. Three. Necessary documentation, attachments. When filing the forms above, Notice 2026-15 requires you to include a Section 4 statement. This is not a standard IRS form but a self-prepared attachment that must include the following. 1. Safe harbor identification. Explicitly state which safe harbor, identification, cost percentage, or certification you applied. 2. Table reference. Cite the specific 2023 to 2025 domestic content table used for your MACR calculation. 3. Calculation methodology. A breakdown of how the Material Assistance Cost Ratio, MACR, was determined for that specific facility or component. 4. Supplier certification formats. While there is no official IRS form for the certificate itself, the notice mandates it must include supplier's employer's identification number, or foreign equivalent, a signature under penalties of perjury, specific attestation pathways as was discussed earlier, PFE compliance statement. To help you prepare for the upcoming compliance cycle, here is a template for the Section 4 statement and a summary of the key documentation requirements for your tax filings. When filing Form 7211, Form 3468, or Form 7207, you must attach a statement to prove PFE compliance. You can use the following format as a starting point. Taxpayer name. Taxpayer employer's identification number. Facility, project registration number. Insert number from IRS pre-filing. 1. Safe harbor selection pursuant to Notice 2026-15. The taxpayer is electing to rely on the following safe harbors. Identification safe harbor. Tracing based on the exclusive and exhaustive list of components. Cost percentage safe harbor. Using the assigned cost percentages for listed components. Certification safe harbor. Relying on valid attestations from direct suppliers. 2. Applicable safe harbor table. The taxpayer has utilized the following tables for MACR calculations. Notice 2025-08, table, insert table number, for example, 1 for utility scale solar. 3. MACR calculation summary. Total direct costs of MPs and MPCs. Dollar amount. Total costs attributed to PFEs. Dollar amount. Calculated MACR. Percentage. 4. Attestation. The taxpayer has no knowledge or reason to know that any certifications relied upon are inaccurate as of the date of filing. Required information for supplier certifications. While there isn't a blank form provided by the IRS, Notice 2026-15 specifies that a valid certificate from your supplier must include these elements to be legally binding. Supplier details: name, address, and employer's identification number, or foreign equivalent. Property description: a clear identification of the manufactured products or components provided. The pathway attestation. Pathway 1. Property not made by a PFE and no knowledge of PFE involvement upstream. Pathway 2. Section 45X. Breakdown of costs for inputs not manufactured by a PFE. Pathway 3. Section 45Y and Section 48E. For all MPs not manufactured by a PFE. Penalty of perjury statement: a signature and date under the formal declaration that the information is true and correct. Filing deadlines to remember: March 30, 2026. Final day to submit comments on Notice 2026-15. Prior to filing, ensure your pre-filing registration is complete. You cannot claim or transfer these credits without a valid registration number for the facility. Tax return due date: the Section 4 statement and relevant forms must be attached to your timely filed return, including extensions. Pre-filing registration process. To secure your clean energy tax credits under Notice 2026-15, you must complete the pre-filing registration process through the IRS Energy Credits Online (ECO) portal. This process is mandatory for anyone intending to make an elective payment or transfer a credit, such as Section 45Y, Section 48E, or Section 45X. The following are the specific requirements and steps to ensure your projects receive the necessary registration numbers before your tax deadline. 1. Critical deadlines. Submission window. You should submit your registration after the project is placed in service, but no earlier than the beginning of the tax year in which you earn the credit. The 120-day rule. The IRS strongly recommends submitting your registration at least 120 days before you plan to file your tax return, including extensions. This allows sufficient time for the IRS to review your documentation and issue unique registration numbers. 2. Pre-filing registration checklist. Before logging in, ensure you have the following information for each facility or property. Requirement details. Personal identity. An ID.me account is required for the authorized representative to sign into the IRS Business Tax Account. Entity info. Legal name, address, and employer's identification number must match IRS records exactly. Never use a subsidiary's employer's identification number for a parent filing, or vice versa. Project details. Physical address or GPS coordinates, date placed in service, and the specific credit type, Section 45Y, Section 48E, Section 45X, etc. Banking info. Routing and account numbers for the entity receiving the credit or payment. Attestations. Formal digital signatures confirming compliance with PFE rules and other statutory requirements. 3. Step-by-step registration process. 1. Authorize your business. Sign into your IRS Business Tax Account and select Clean Energy and Manufacturing Credits to start the authorization. 2. Access the ECO portal. Once authorized, enter the Energy Credits Online ECO tool. 3. Register facility, property. Select, register, and follow the prompts to provide details for each specific facility. 4. Review and submit. Once submitted, the registration is locked. You cannot make revisions while the IRS reviews your package. 5. Receive registration number. After review, the IRS will issue a unique registration number for each project. You must include this number on your annual tax return, for example, Form 3468 or Form 7211. 4. Record keeping for PFE compliance. Under Notice 2026-15, your registration and subsequent tax filing must be supported by a Section 4 statement. Important. While the registration tool collects general project data, you must keep your supplier certifications and MACR calculations in your internal files for at least 6 years. The IRS may request these documents at any time to verify the validity of your registration number. For a successful pre-filing registration in the IRS Energy Credits Online (ECO) portal, you will encounter specific data fields and documentation requirements tailored to your credit type. Below is a breakdown of the fields you should prepare for, based on IRS Publication 5884. 1. General information, required for all. Before entering credit-specific data, every registrant must provide tax period, the specific tax year for the election, entity details, employer identification number, legal name, address, and entity type, for example, C Corp, partnership, tribal government, banking, routing and account numbers for the credit payment, return type, which form you usually file, for example, Form 1120, 1065, or 990T. 2. Specific fields for Section 45X, Advanced Manufacturing. The Advanced Manufacturing Production Credit requires information that proves you are a legitimate producer of eligible components. Attestation of non-duplication. You must attest that no Section 48C credit has been claimed for the same facility. Component selection. A list where you select which eligible components, for example, solar modules, battery cells, or inverters, are produced at the facility. Related party election. A yes/no selection regarding whether you are electing to treat sales to related parties as sales to unrelated persons under Section 45X, A, 3b. Supporting documents. Proof of ownership. Documentation for the manufacturing premises. Operating permits. Local or federal permits required to produce the specific components. 3. Specific fields for Section 48E, Clean Electricity Investment. Because Section 48E is an investment-based credit, the fields focus on the facility's physical and operational status. Facility location. Exact address or GPS coordinates and the relevant census tract. Operational dates. Date construction began. Critical for determining eligibility for certain bonus amounts. Date placed in service. The facility must be in service before you submit the registration. Technology type. A narrative description and selection of the energy source, for example, solar, wind, storage. Net output, capacity. Confirmation of whether the facility is under or over 1 megawatt AC. Then there are the supporting documents. Interconnection agreement. An executive summary of the agreement with the utility. Engineer's report. An executive summary of an independent engineer or commissioning report. PWA verification. If claiming the increased 5X credit, documentation showing compliance with prevailing wage and apprenticeship (PWA) rules. 4. PFE specific check. While the ECO portal gathers project data, remember that for Notice 2026-15, you must internally maintain the Section 4 statement and supplier certifications. The IRS may use the information gathered in the ECO portal, like your component list, to cross-reference against PFE prohibited lists in the future. Project-specific information. To complete your pre-filing registration in the IRS Energy Credits Online (ECO) portal, you will need to provide specific information for each project. Based on IRS Publication 5884, here are the exact data fields and document requirements for the Section 45X and Section 48E credits. 1. Advanced Manufacturing Production Credit, Section 45X. For manufacturers of components like solar modules or batteries, the portal requires Section 48C attestation. You must confirm that you have not claimed a Section 48C credit, qualifying Advanced Energy Project credit, for the same facility. Eligible component selection. A drop-down menu where you select the specific components produced, for example, solar energy components, inverters, battery components. You can select multiple if applicable. Related party election. You must indicate if you are making an election under Section 45X, A, 3, B, to treat sales to related parties as sales to unrelated persons. Supporting documents. Proof of premises ownership. Documentation showing you own or lease the manufacturing site. Operating permits. Federal or local permits required to produce the selected components. Offshore wind vessel docks, if applicable, Coast Guard certifications, Form CG 1261, or Bill of Sale, Form CG 1340. 2. Clean Electricity Investment Credit, Section 48E. As a technology-neutral credit, Section 48E focuses on the emissions and output of your facility. GHG emissions attestation. You must confirm the facility has a greenhouse gas emission rate of not greater than 0. Then there is the facility and property information. Address, GPS coordinates, the physical location of the project. Maximum net output, measured in alternating current, AC. This determines if you qualify for the 1 megawatt exception for certain bonus credits. Critical dates. Construction start date. Essential for verifying eligibility for the 5X, increased credit rate if PWA rules aren't met. Placed in service date. The facility must be operational. Supporting documents. Interconnection agreement. An executive summary of your utility connection terms. Final engineering report. Evidence the facility is functional and meets net zero emission standards. PWA verification. If claiming the increased credit, you must be prepared to file Form 7220 to verify prevailing wage and apprenticeship compliance. 3. PFE compliance strategy. While the pre-filing registration doesn't require you to upload your PFE Section 4 statement or supplier certifications, you must have them finalized before you receive your registration number. The IRS reserves the right to review these documents during the 120-day registration window to ensure your facility isn't receiving material assistance from a prohibited foreign entity. Summary. Safe harbors. You only need to account for components listed in the 2023 to 2025 domestic content tables. Unlisted items are generally disregarded. Registration. A unique registration number is required for each facility before a credit can be claimed or transferred. Documentation. Suppliers face significant penalties for false certifications, and taxpayers must attach a compliance statement to their annual returns.